podcast listeners? This is your boy Marcus Norman from Gentleman Style Podcast coming to you live with another brand new episode. And I hope this message serves you today. I hope I bring a very impactful message today. I always try really hard to give insight and share wisdom and share something and speak on the topics that you care most about. And please reach out in the comments, reach out in an email. You can email me at marcusnorman737 at gmail if you ever have questions or comments about my podcast. And send me those comments. I want to hear from you. I want to hear from my listeners so I can grow the podcast and continue to give you the kind of messages you're looking for. Jumping right into it, we are talking about real estate today. Currently, at the moment, that's my most talked about topic, and everyone wants to know how to invest, what to invest in, what are the benefits of real estate, and should I be investing in this pandemic, this COVID-19 pandemic, this economic climate that we're in. And so I will always stick by what I said earlier. It's a good time to invest. What you'll find though is investors right now are building cash revenues because the biggest thing right now is they're looking for those great deals. And if you can find a really good investment, a real estate investment deal right now, um, time now is the time to take advantage of the market, because unfortunately there are gonna be some real estate coming here on sale at a significant discount. So we as investors, my listening audience, our investors have to, you know, unfortunately we will take advantage of this market, and there's gonna be real estate on sale due to the pandemic. Right now, um, people weren't prepared. People didn't have enough cash revenue to prepare their household and keep their home in check. And so, a lot of investors that I know, friends of mine, mentors, coaches, have been stockpiling cash for a rainy day, and this is that rainy day. And so, we're gonna jump right into it. Why do I love real estate investing, and why should you? And how does it build wealth? And real estate investing is a unique animal because it builds wealth in several different ways, in several unique ways. And I'm going to touch on some 8 points that really share how why real estate is such a um, go-to investment, and why so many people enjoy real estate and cherish real estate. Okay, diving right in. And so the first point I want to touch on here is real estate has a safer value than most investments. What you'll find is real estate doesn't fluctuate up and down like most other volatile markets, like stocks and bonds and mutual funds. And also with the US dollar constantly, more US dollars and US American dollars being printed for to substantiate and puff up the economy and continue to stimulate the economy. This is not good because this is reason for concern. Maybe not panic, but definitely concern, and something to pay attention to, as the U.S. dollar is overinflated. As more money is printed, the lesser the value of the U.S. dollar goes, and so you won't typically find that in real estate. Real estate is an appreciating asset. Um, long after you've made the deal, especially the dirt under it. They're not the funniest and most unique things a real estate mentor of mine and coach taught me was that buy land. You know, they're not making any more of it, and it's true. Land is such a commodity because it's not something that you can make more of. And that's what makes it precious at its core is land is an asset that you can't make more of. You can build more houses as long as the land is available. And that's why land always goes up in value because you can't make more of it. And so when people buy land and they own land, it's a very powerful tool to add into your portfolio. But real estate as a whole is just safer in value. The next thing I want to touch on, number two, is natural appreciation. Over the course of several years, real estate has appreciated over a period of years, average about 3%. That's a constant increase in demand. And so over those years, that 3% average growth for real estate, you can't beat it. And that's at a bare minimum. I know people that are doing double digit returns with their real estate. and they're more in an active role, and they're full-time real estate investors, and is you can't beat it. It's a hard asset, and that's my point here. It's a hard, tangible asset that you can touch, you can drive to, you can feel, you can smell it, you can walk in the building, and you can see what your cash is doing for you. You're not going to get that with the stocks and bonds. And, for most people, that can be a heartache to kind of watch the stock market and watch your money ebb and flow and go up and down. And the swings of just the stock market is just, it can be a lot if that's your nest egg, your life savings, your money that you're saving for retirement, whatever that may look like. And so it's very real estate is a powerful tool because it's a tangible asset. You can lay your hands on it, you can touch it, and you can watch your money work for you when you're building that apartment complex, or building that real estate, or buying that real estate. You can watch what your money is doing for you on a daily basis. I mean, when I first dove into real estate, and this was a little bit odd for me, but when I first dove into real estate, I wanted to walk in my house, and just the feeling of just laying sprawled out on that fresh new carpet smell. I had no furniture at the time, and it was just being able to just sit in this building, this structure, and know that this is what my money has done for me. That was powerful. And I had no care in the world. I was just smiling ear to ear the entire day, just because I could live and breathe and be one with the building I'm in, and just be existence with it. That's something you can't buy with stocks and bonds. Although you buy a fraction of a corporation, you don't necessarily, have the decision making capability with that corporation when you buy stocks of a company, right? You're buying into a company and offering your money to them, and hopefully that company does well with the money so that you can gain a return and make a profit. But you don't have a say in the decision making of that company. You do have a say with the real estate that you own and that you buy. Excuse me. The next powerful tool that is in your arsenal when owning real estate is you can force appreciation. And that's a term used by more so by real estate flippers. But I want to give you some insight on how powerful a tool it is, because we do it as homeowners. We just never knew the term for it as far as investing goes. But forcing appreciation involves you buying real estate, and adding value to that real estate. That's an upgrade. If it's a residential real estate, then adding, washer and dryer, upgrading the bathroom, upgrading the kitchen, upgrading the appliances, giving it a fresh, nice coat of paint, replacing the air conditioning system, adding, knocking out a wall and adding a bedroom, converting a garage, right? All those things add value and can force the value of that real estate up. And so if you buy, let's say, a house that's hasn't been taken care of, and hasn't, been maintained very well, you can buy a house, let's say, for $50,000, and then you buy that house, and then you put about $10,000 of work into it, and now that house is now worth $120,000 just from $10,000 of your investment and maintenance of the home. Well, that's huge, right? That's a significant increase in the value of your home just from that small investment. And so that's the power of forcing that appreciation to go up, because you've made significant improvements to the home, whereas originally you bought it for 50,000 or less, but now just a small investment skyrocketed your investment value even more. And so what flippers do, and what most real estate investors do, is they take that one piece of information, and that's what they use to buy depreciating assets, buy depreciating real estate, rehab it, fix it up, make it nice, put nice countertops and nice household appliances in there, and then they sell it for a higher value, or refinances and get their $10,000 investment back and wash, rinse, and repeat and do the same cycle all over again. So this is powerful. Fixing roofs, so adding solar panels, that fresh coat of paint that I'm talking about, converting bedrooms and garages to add additional space. All of this is powerful and can make that real estate a powerful tool in your portfolio. The next thing, and this is huge, this is big, especially if you're going to do this as a business, but the tax benefits of owning real estate is unimaginable. And I'm just going to list off a few of the benefits here. Depreciation, some of the write-offs. These are some of the write-offs that you can file on the real estate that you own. So I encourage anyone, um, as you grow in your real estate business, as you grow and as you expand and as you acquire more assets, please, please, please get a certified CPA. Get a CPA, get someone in your corner who you know, who you trust. And also, it helps that they own real estate as well. And get someone in your corner to help you do the books right and invest right and file your taxes correctly. But these are just some of the tax benefits and some of the write-offs that you can get from owning real estate. And first one is depreciation from income. Mortgage interest from income. That's the mortgage interest that you pay on the mortgage loan of paying that loan if there is a mortgage. You can write that off. You can also write off the cost of repairs and maintenance and upkeep. So all those that $10,000 that you put into the property, that's a write off on your taxes, right? Cost of services, legal consultation or rental management. If you're buying and holding real estate, that's what I do. That's what I enjoy. It's more passive for me and it's easier for me to maintain the lifestyle that I want to live. But legal consultation and rental property management, those are write-offs. Those are expenses on your business, on your real estate business. And so you can write off those expenses at the end of the year or quarterly and make sure that you get top dollar for your money. Utilities are also write off. Travel costs with the property. If you own out of state real property and you have to travel to go see your property, maybe quarterly or annually or even monthly to see your property, if you own property a couple hours away, that mileage is business, right? That's a business expense. And so you can write that off. And lastly, the last one under this tax benefits blurb is property taxes. You can write off your property taxes as again, an additional expense to your property. So the government, our government wants us to own real estate, and people don't even realize the power of this when you own real estate. That's why they give you so many tax benefits and so many tax savings, because our our government is wired to give you tax incentives. Because when you become a real estate investor and you are able to buy real estate and own real estate and manage it and take care of it, you become an asset to the government. So the government wants you to own real estate. It does the government, your city council member, your mayor, your politician, no good to drive through a area and it's nothing but condemned, rundown buildings. And so when you're an asset, so as an incentive to you to own more real estate, they give you all these incentives. You got to think of it from the big picture. And that's what makes real estate so powerful. Again, number five, the fifth thing on here is passive income for life. Owning real estate is one of the most lucrative passive income investments I have ever could have imagined. Had I known what I know now in my younger years, I would have done some things differently. But I digress. It's still a great investment to get into, and it's still a powerful revenue stream. So imagine this: take a trip with me. You buy a rental property, a four-unit apartment building, or four-unit building. You live in one of the units, and you have three other units that you rent out for monthly income. That monthly income is now, after all expenses are paid and your mortgages are paid, leaves you with, let's say, $1,000. That's $1,000 a month sitting in your pocket every single month. Let me break that down even deeper. Say you want a duplex, right? You bought a duplex and the duplex, the mortgage on the duplex is $1,000 a month. That's 2 units. You buy the duplex, and then you rent out both sides of the duplex for, let's say, $900 each side. That's $1,800 coming in every month. After you pay your $1,000 mortgage, you're still left with $800 a month. $800 a month from just owning the building. Your name is on the building. That's powerful. And as long as you own that building, as long as you own that asset, you'll have passed that $800 for life. And it's yours. You can increase rents, lower rents. Well, I don't know why you do lower rents, but you can increase rents. You can get all these tax benefits that I previously mentioned. That building is yours. And so you can write off all your expenses. You can gain this income for life. And oh, by the way, this is also more powerful now. A lot of people forget this. Guess what? Let's say you got a 30-year mortgage or a 15-year mortgage. Well, this is passive income for life. So guess what happens after that 30 or 15-year mortgage is paid off? Now you no longer have that $1,000 mortgage. Guess what happens? Now $800 turns into $1,800. So if I'm 30 years old and I get a 30-year mortgage and I turn 60 when I make my final mortgage payment, I just got a raise on this real estate asset that I've owned for 30 years. I just got an increase. I just got a pay raise automatically. I'm taking more money into retirement with me than when I did, than when I started off. I just got a promotion. Most people work 30 years at a job and only to get $1, $2, $3, $4 raise. 30 years at a company. You've given blood, sweat, and tears to just get a couple dollar raise. You just gave yourself $1,000 raise passively for just owning the building. And so I want to stress this point because it's so powerful, and I want you to be happy, and I want you to live debt free, and I want you to live a life of abundance. And so I think real estate is one of the best ways to get there. The next thing is market cycles. Like I said earlier, this is a market cycle. And so for for the past several years, the economy has been doing really well. But smart real estate investors who survived the 2008 2009 real estate market crash know better. And so what they've always waited on is they've been waiting and stockpiling cash and stockpiling money and waiting for a time like this. Because now real estate is about to go on sale. With that, they're waiting for these a time like this where now people houses are coming up for auction and going into foreclosure because people are overextended themselves on these homes. And so now they're just waiting for markets like these to buy up foreclosed homes. And although it's unfortunate that people are losing their homes, it's also an advantage to you, my listener, as a smart real estate investor who's thinking of the future. And so it benefits you to buy real estate at a significant discount. And this will be the time to do it. As things turn around, just keep your eye. Reach out to your local real estate broker, agent, and have them send you their listings. And just watch the market and watch your favorite real estate asset. If you have your eye on something, watch what happens to the price in the next couple of weeks or months here. And see what happens. You'll be pleasantly surprised. I know I have. This is the time. The seventh thing here is fairly easy access to funding. Now, because of the pandemic, people over 40 million Americans losing their jobs, um, the Trump administration and the government and local governments have made attempted to make access to capital easier. And so raising credit card limits and offering SBA small business administration loans and all these payment protection program loans and all these different loans. This is a time where access to capital is unique and it's different than anything we've ever seen. Now, some people are tightening up, some financial institutions are tightening up their um, requirements, their loan requirements. But for the most part, this has been the time. This hasn't been easier to gain access to capital other than this. And so now is the time to really dive in and really take a look at some unique ways and unique opportunities to invest your money and invest that cash, right? And go out and reach for it and go to meetup networking groups and reach out to different financial institutions to make sure you get the best rate for your money. And then when you get access to that money, deploy it. Deploy it in the best strategic way possible for your household and take advantage of these economic times and these economic slowdowns. Lastly, but not least, the last thing I want to point out to you is transfer to your kids and pass this on. If any of my audience knows me, they know I am very big on passive income and leaving a legacy behind for the Norman generation. And this is big for me. This is huge. I don't take this lightly. Real estate is the goal, along with some other investments that I have. But this is real estate is one of those assets that I intend to leave a legacy beyond to change my family's name and to change the generations of Normans behind me who have never ever been free and who have always had to punch a clock and who's always have to work a traditional 9 to 5 and who's always been slaved to their employer. I want to leave something different. I want to set the tone for generations of Normans to build legacy on. And real estate is very easy to leave behind. And not only real estate, but wealth building. Again, I described to you owning that 30-year mortgage and paying that 30-year mortgage off and still receiving that income stream of $1,800 a month. Well, now you're in your 60s, you're enjoying retirement, you're traveling, and one day you and I are going to pass on. Well, guess what you can do? You can pass on that $1,800 to a loved one, a family member, a relative, a son, a daughter, a granddaughter, a grandson, and leave them and give them a better start and give them a head start to life. All right, that's how we break the curse. That's how we change the generational name. That's how we give something back to our names. And so, like always, man, that's my final point. That's my final topic. Again, if you ever want to get in contact with me, leave a comment. I check those personally, or subscribe to my channel, and I appreciate it. It allows me to grow and reach more people and connect and share this message. And so, for all my men out there, take care of your families, take care of your homes, and take care of business. This is Marcus Norman, Gentleman Style Podcast, signing off. Love you.